Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is the 15th of October. We're halfway through October already. That's pretty hard to believe. Today we're going to talk about canola and whether a canola bull market is hiding in plain sight. We're going to talk a little bit about the Canadian economy and what is happening in some interesting things happening here in Canada in the macro markets. We're also going to talk a little bit about some other headlines around wheat and some other things. So stay tuned for this for today's video because we're going to get all into that. Before we do that, let's talk about what happened in the futures markets today. Canola was up $4.80 to 620.40. Minneapolis wheat was down 2.5 cents at 551. Kansas wheat was down a quarter of a cent at 488 and a quarter. Chicago wheat down 1.5 cents at 498 and three quarter. Soybeans unchanged at 10.06 and a half. Corn up 3 3/4 at 416.75. Bean oil up 23 points to 50.8 cents per pound. The Canadian dollar dropped 2 points today at 71.17. Live cattle still up a little bit. 246.78 per hundredweight is where that landed. Feeder cattle down marginally to 380.68 per hundredweight. All right, before we get into a lot of the canola information, we did put out a really good report today on the canola market and some of the technicals that we are looking at. We're just going to scratch the surface here today in this report. So if you'd like our more in-depth information, our premium reports, go to CanadianAgMarkets.com/subscribe to subscribe. We'll put that link in the description below as well. All right, here's the November chart. We are seeing some positive movements here in this market as we bring the November contract into delivery, or we're close to getting there. Yesterday, we talked a little bit about the trade above the 20-day moving average, and we talked about this channel. November canola did make it above and closed above that channel today. Although I want to kind of take a little closer look at the January contract because we have seen the open interest, or the bulk of the open interest, now move to the January futures contract. We're also seeing a higher amount of all volume trade in this market as well. And as you can see here, our candle today traded well above and closed nicely above the channel. It has not done that in quite some time. So that could be a positive development here for the technicals in canola. Again, we put a full report as well as some strategies that you can use in this market for canola in our written report. So give me a holler if you want to see that report, or subscribe at CanadianAgMarkets.com/subscribe. All right, let's get into a little bit of the Canadian economics here. This was a report published, or a story published by the National Post this morning, that talked about the economy falling into recession thanks to Trump tariffs and according to Crown Corporation forecasts. Now, the definition of a recession is 2 quarters of falling GDP. So that is what the Crown Corporation is or Export Development Canada, I should say, is calling for in this report. What's interesting is you can kind of see that some of this estimates are already being priced into the market. We talked extensively yesterday about the Canadian dollar. It didn't make another new low today, but it came pretty close. It continued to move further down, so it made a lower close today, or at least this is where the market is trading at this time. The Canadian dollar stays open a lot longer than the other markets. So we've seen a big weakening in the Canadian dollar recently, but what's interesting here is that we actually saw an all-time high today come into the TSX Composite Index. So, the fears of a recession, usually the stock markets price in bad economic data before the bad economic data is released. The stock markets are often considered a leading indicator of what is to come. We're not seeing that in the TSX Composite, but there is some reasons for that. Here's gold, for example. Gold is making another all-time high today. It's been doing that for the last 3 days and has essentially just been out of the gate like a running horse since mid-August here. So this market continues to be very, very strong as a safe haven play for a lot of the uncertainty happening in the marketplace today around tariffs, around trade disagreements, politics, all kinds of things, not only in the US, but around the world as well. So gold is being seen as a safe haven here, more so than a lot of other commodities. And when you look at the big gainers today in the TSX that drove it to new highs, we see a lot of precious metals here. Gold Aya Gold and Silver, Endeavor Silver, Celestica, Silver Corp, Natural Resources. A lot of this is also coming from the fact that there is a trade row between the US and China, and a lot of that has to do with mining and minerals. And so we are poised, or Canada is poised to take advantage of that in some regards. So we are seeing a bump in some of the Canadian mining stocks as a result as well. Moving on to some headlines around the grain industry now. Argentina is set for a record wheat and corn yields so far this year. This is published by a Middle Eastern milling operation who obviously would have some vested interest in just how large the Argentine crop is because they import from there. So Argentina's agriculture sector is poised to make a record wheat production. What's the number here? 23 million tons, which is equal to the record set in 21-22 crop year. This is an upward revision or increase of about 3 million metric tons from earlier projections and reflects, robust yields driven by optimal soil moisture across the 6.7 million hectares planted. So, Argentina saw unprecedented rainfall in July and August, with several records set for August for rainfall, which exceeded, according to this, 115 years of monthly historical records. So, bumper yields for Argentina. They're not the largest wheat producer in the world, but they are a large wheat producer in the world, and their harvest comes online after the North American harvest does. So, it does hit the market at a key time and is one of the reasons why we are seeing wheat continue to be depressed in this market. Some news here for durum growers. Kazakhstan is ready to become an exclusive supplier of high quality durum wheat to Turkey. Canada has sold to Turkey in the past. We generally don't send a lot of our durum there. We send a lot of our durum into northern Africa. However, some of the this may Kazakhstan has also been increasing the amount of durum that they're producing and increasing the quality of the durum that they've been producing. So this is a significant step for Turkey. They will not have to import as much from other nations, even like Italy and Canada, even the U.S., Mexico, things like that. So it just makes Canadian durum a little bit more difficult to compete in these markets. Wheat yields all over the world were good this year, so this is likely to have a negative effect on us overall, but just wanted to put that out there for any of our watchers or our viewers who are in the durum growing areas of Canada. Russia resumes wheat supplies to Indonesia, according to Reuters article here. Canada also is a big supplier of wheat to Indonesia and some of those other South Asian countries. But Russia, which is the world's top wheat exporter, has resumed shipments to Indonesia in October after a pause since January due to negotiations between the two countries over access for Russian grains. This paves the way. Russia's agriculture export agency estimated grain supplies to Indonesia, mostly wheat, at 1.3 million tons before the new agreement. So far, Russia has only supplied 123,000 tons of grain all year to Indonesia. Canada has likely been taking advantage of that. So far, we do ship high quality durum wheat to Indonesia and again some of those countries in the South Asian area. So a resumption of Russian wheat, continues to kind of add to the malaise that we are continuing to see in the wheat markets. The delayed October WASDE could have far-reaching impacts for U.S. agriculture. This is an article I found in Brownfield here. Most of the article talks about how the market is using private estimates in order to gauge market sentiment at this point. And the danger of that is normally, obviously there are private estimates that are released at all times, but generally the backstop for all those private estimates is the USDA WASDE. So estimates now are getting really wide, quite volatile. You don't know which ones to weed out on the bottom side or even on the top side. Perhaps doing an Olympic average is probably the way to go. But the darkness that we are seeing in an information flow could have some far-reaching effects when WASDEs do resume, because we'll have 2 months of kind of blackout period. This is assuming that there is a WASDE resumption in November. And that opens up more opportunity for surprises in the marketplace, and that creates a lot of opportunity for volatility. Lots of traders like volatility. Maybe that's a good thing. I don't think farmers generally like a lot of volatility. So not necessarily a good thing there. Again, um, we are always proponents of more information is better, and transparency is better. Not that this is a purposeful transparency of agriculture information, more of a broad one as the government shut down. But we are anticipating some volatility to come up as a result of this government shutdown. All right, if you're not subscribed to this YouTube channel and you want to get notifications when we make new videos, hit subscribe to this YouTube channel. And that's all we have for you today. We will see you again tomorrow.